Hello everyone. India's stock market is said to be overvalued 40 times more than its peak. But is the reality the truth or just a scary headline? Let's dig deeper. When people talk about Nifty or NSE 500 index being expensive, they point to the numbers like 47% of stocks are trading above 40 times P. Some even highlight extreme cases in fertilizers or chemical sectors where there are few companies which are trading at 1500 times their earnings, which is the 1500 PE. At first glance, that looks dangerous, but here's the catch: PE works absolutely well when comparing within one sector to one company, or within one sector, or let's say one company. It loses when you lump together all 500 companies from completely different sectors. Let's say, for example, different industries, whether it is in terms of banks or IT, FMCG, auto, chemicals, each with very different business cycles, growth rates, and capital structures will have obviously different PE ratios. For example, a stock or tech stock with 40 PE but 30-40% of earnings growth might actually be cheaper than a slow growing, let's say, company at 20p. That's where PEG ratio, PE divided by growth is what matters in the market. Growth is what defines what the valuations would be in the future. And these are the things, the PG and P is something that we need to look into. And if you really want to make sense out of it, it usually becomes much more useful. If growth keeps pace, even high P's can be justified. But if growth falters, then yes, it's a huge risk. So the bigger question is, should you sell your stocks just because the Nifty 500 P looks high compared to the emerging markets or the developed markets, be it US, Taiwan, or Germany? Not really, because the Nifty can't, the Nifty isn't just one company, it's a basket of diverse businesses with different companies having different sectors allocated to it. So just looking at the headline PE of the whole index and calling it overvalued, I think it oversimplifies the reality. In short, high P's don't automatically mean doom. They mean you need to go down and look out for the companies and also for the sectors that you need to invest in. And that's where the real investing edge lies. Thank you.